we're going to be unable to have the economic recovery at the current pace where it is just like a rocket ship taking off. That will start to compress in the back half of the year. That's when we go into more of a stagflation. You've got rising inflation, you've got slower growth, which is one of the best environments for the gold market.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.
Hey everyone, this is Elijah K. Johnson with Liberty and Finance. And with us today is Phil Streible from Blue Line Futures. Phil, thank you so much for joining us today.
Yeah, thanks for having me.
Since the beginning of April, we've seen a rise in both gold and silver. Can you kind of share with our viewers your perspective on what's been driving the prices higher?
So the underlying driver has been mainly that Treasury yields had been flat since about that time. Also, the U.S. dollar index had continued to march on lower. It had a small recovery, but as it sells off, it tends to benefit some of the metals, commodities in general. And there's been a big charge in inflation plays. People have been looking at more inexpensive ways or undervalued commodities that they feel could benefit from rising inflation. So gold was a key target as it's been a lagger throughout the year.
Now, do you expect this rise to continue in the coming months?
So the problem that we have going forward, specifically on the gold market, is that we do expect treasuries to continue to rise after a consolidation period. That would be suggested because of stronger economic data that we're expecting down the road. In addition, you do have the Federal Reserve about 2 weeks out. You have the ECB out next week as well. They may indicate that they could pull back on some of their bond purchases and begin to taper.
And what kind of an impact do you think that tapering might have on both gold and silver?
So gold specifically may have a correction. Remember, gold had just come up to about unchanged on the year. So there's a lot of people that were using that premise, get me back to even, I'll never do it again. So if you bought on, December 31st, 2020, you're back at your break-even point. So people may step out of that, looking for other asset classes to chase that have done much better. Or the silver market, on the other hand, we do anticipate that the gold-silver ratio continues to break down. Silver outperforms gold. The silver investment demand and also industrial demand have continued to outstrip the supply with demand increasing.
Now, one of the things that I'm hearing is that with this rise to about 1900 in gold is breaking out above a downtrend line, and that is very bullish. Your perspective, it seems like that's not as significant as what you're looking to happen with the Fed and Treasury yields.
Yeah, you have two different stories. One, you have a technical analysis-based story, and then you have a fundamental-based story. So the technicals often do lead the fundamentals. We've seen this turnaround here as all asset classes have risen. Now, if you were to take out some of those fundamentals that I was discussing and just look at the technicals, it has broken out of a downtrend. But if you rewind back, look at some of the latest breakouts we've had, they've failed, unfortunately. So we're much more cautious on these breakouts, not to get too heavily invested in these markets and use more of a risk management strategy around it. Whether we do involve with the futures contracts, we do use the smaller futures, we do use call options, things like that, calculated risk plays. So these breakouts, they've been head fakes the last several times. So again, we're cautious.
And with respect to where you see gold going, do you see it just kind of consolidating sideways, or could it fall significantly?
So it could pull back as the yields continue to rise if the dollar does get a bounce off its recent lows. Now, I don't want you to feel that I'm bearish at all on gold. We're just talking on short term. We trade those macro cycles. The cycles often last quarter at a time. As you go farther in the back half of the year, we're going to be unable to have the economic recovery at the current pace where it is just like a rocket ship taking off. that will start to compress in the back half of the year. That's when we go into more of a stagflation. You've got rising inflation, you've got slower growth, which is one of the best environments for the gold market. So we do believe the back half of the year is going to be much better for the gold market. We could see $2,000 gold come into D's 2021.
Now, when it comes to the dollar index, I mean, this is another thing that you're going to have to focus on with respect to gold, because gold is kind of seen as an alternative to the dollar. Now, what are you seeing currently in the dollar index? Are you bullish or bearish on the dollar?
So the dollar index is retesting recent lows. If you look at a daily chart, we've touched this level 3-4 times just over the course of the year, and we should continue to break down. However, if they do indicate the Fed that they are going to lean a bit more on tapering, talk about stronger economic data, pushes forward those projections of when they finally do raise rates, you'll see the dollar strengthen on that. However, the dollar is in a long-term secular bear market, so any rallies should be sold in the dollar index. So use those rallies, those corrections in gold to lightly position for the third and fourth quarter when stagflation occurs, and that's, again, the best environment for gold.
Now, you mentioned gold will probably, you're looking for around $2,000 an ounce come later this year. What are your price targets on silver?
So silver's a bit of a wild card. I mean, silver always, it's easily impacted. You get a small individual of investors that either cover their shorts or, start targeting to the long side, as we've seen some smaller companies out there. Silver futures could break out to the upside. We do have positions on going out to September where we're using call spreads that have really good risk to reward ratios. On any correction on silver, 26 to 24 is key level of support that I would look to add. 22 to 20, that's another level that I'd look to add. We don't believe that silver will get back down in the teens anytime soon because the underlying demand picture on the upside, there's no telling how high it can go. It's really because I said it's a pretty small market, and if you start to see that demand outstrip supply at an accelerating pace, we could see another retest of $40, $50.
Definitely. I mean, that's one of the things that I find really interesting is how high silver could go very fast, especially because of the resistance around $30. It seems like if it gets above there, there's no knowing how high it could go.
Yeah, so when we were talking technicals before on the gold market, and you see there is a small breakout on it, the chart pattern on silver is just so much better. If you were a technically based trader and you looked at that, you've got a massive flagpole that went up, you've got this bullish pennant that's going forward, silver gets above 30, that's a complete breakout. We'll probably retest those recent highs that were on a Sunday night when the last time it was tried to be targeted in a short squeeze. And if we get above there and we get some real demand behind it, we get short covering going on, it could be another flagpole extension up. And that's where you get the $40, $50 range again. And I think that silver will have an entirely new price band. I just hope that it's not one of these green shoots again where we shoot up, we pull back and things like that.
And your perspective on the continued silver squeeze movement and that impact on the price, because I know here at Miles Franklin, we've seen so much demand for precious metals really since the beginning of COVID, but it was the most business we had ever seen then come late January, early February when we saw that silver squeeze. Yeah,
definitely coins, small denomination on bullion, 10 ounce, 100 ounce, bars and things like that. There's been this underlying demand. You've got this kind of like hoarding mentality, and it's something that people can physically hold, things like that. It's easily pretty liquid, but you're not going to be able to liquidate it on a Sunday night if you get one of these, another targeted move on it. So, I mean, that's why we always use the futures contracts with us. But, I do hold a physical and I do find comfort in it. So if there are corrections on silver, I would continue to accumulate personally on silver on the bullion level. And I would anticipate others do as well, keeping that small physical supply side quite tight.
And how much of an impact on price do you think this movement has had?
Oh, it's definitely it's the reason why we haven't dropped below 20 in quite a while. And, I just don't think we will. You're going to see bullion dealers are going to take advantage of these elevated prices, underlying demand, constrained supply. So prices should continue to hold near these, $30 levels. It's just the breakout would be more a short covering on the paper silver. That's what I think that would really lift it up to the next level.
Now, when it comes to the other precious metals, you've mentioned that platinum has been a really good trade recently. If you would like to talk a bit about that.
We've been really trading platinum. When it gets over 1225, 1250, it seems too high. When it gets back below 1200, that's an inflection point, and 1175 to 1150. So we've just been trading that cycle back and forth.
Now, some people I talk to have been talking about how really a few years ago, when platinum was higher than palladium, the auto industry switched to using palladium for catalytic converters. But now palladium was way above platinum's price, so they could be switching back, and that would be extremely bullish for platinum. Your perspective, kind of long-term for platinum, are you bullish?
Oh, yes. We believe that, we'll continue to see elevated levels, 1,200 this year, 1,300 next year, 14, 15, unless they start finding these substitutions again. It just doesn't seem that the supply is coming online fast enough for zinc, rhodium, things like that are used in these catalytic converters. So as that supply demand, imbalance remains, you'll continue to see that underlying bid. Now, as far as 2000 and above, I'm not sure if we get to that level because, as I said, that the automotive industry will start targeting cheaper metals.
So there are alternatives then besides platinum and palladium, is what you're saying?
Yes, there are out there. But we just haven't seen that technology really come to fruition yet. Once it does, then you'll see these changes. Just like crude oil prices, I don't think you're going to see $100 crude oil anytime soon because of the fact that the demand isn't as great as it once was. They're shifting to electric vehicles. They're looking for other alternatives, some of the green technologies and things like that. So they will always evolve on different things.
No, many people I've talked to have said that, we're entering a commodity bull market and that commodities have been extremely undervalued, especially if you look at them with respect to equities. Your perspective on that kind of as a big picture, and then also one of the commodities that has just been running recently is copper. So your perspective on copper as well.
So when you go to commodities as a whole, yes, we've been in the bull cycle really started in November. That's when we got those number of vaccinations had started to take off. People started to lift some of the restrictions and things like that. That's where demand all of a sudden starts to take off again. Supply has been slow to come on. So all these commodities across the board, and certain specific commodities like agricultural markets have been targeted by different countries having increasing stockpiles. Copper was another one, increasing stockpiles, infrastructure bills, things like that. So commodities super cycle is definitely started. The U.S. equity markets, they're going to continue to grind higher, we believe, until about the third quarter because of the fact you look at year-over-year growth, you look at CapEx spending continues to increase, and it's just they're taking advantage of a low interest rate environment. Now back to copper, we have seen a correction on copper that was caused by China saying they wanted to curb some of the excess speculation in key commodities. Prices had come down. And then what they do is their yuan broke out to the upside, so they'll end up buying what they just talked down. So it's kind of funny the way that goes full cycle.
But it sounds like you're still bullish on copper and other commodities.
Definitely, I definitely like copper to the upside. You get these big corrections in copper. It's all about position weighting. Whether you're using like Freeport Mac brand, you're using the mini futures, you're using the large futures contracts, however you're positioning in the copper, you just got to keep you can't get too overweighted in your portfolio in case a correction does occur. You don't want to be able to not live to fight another day. So, we like to keep some of the positioning sizing down, whether it's margin equity ratio, whether it's capping it at 4% on any particular commodity in your portfolio. But we do believe that copper demand will continue to rise. And we didn't see demand or supply coming on anytime soon.
Now, when it comes to precious metals, again, how does that play into the general commodity bull market? Because silver definitely has a lot of industrial demand, gold a little bit, but not so much as silver. So how do the precious metals kind of play into this move we're seeing into commodities?
Gold's more of a currency rather than a commodity, whereas silver is definitely a commodity. Again, platinum, palladium, copper are all commodities. when we characterize gold, we consider it a currency because it's susceptible to, the central bank, their holdings of it. It plays against different currencies. It acts as hedges on inflation, and then it fluctuates with treasury yields. So we keep it in that particular basket. Commodities, when you look at the CRB index, one of the heaviest weighted sectors is the energy sector, followed by your agricultural sector. So when you talk commodity super cycle, it's more on those are the bigger inputs on there, and then it breaks down into the different layers. So silver, though, like I said, I'm very, very bullish on silver. Like any kind of correction there, and we believe that underlying demand is going to continue to remain strong.
One of the interesting things about silver is, as we've mentioned, it is a very much an industrial commodity. It also has the monetary aspect. But if we do see the economy slowing a bit, because right now we're recovering quite a bit right now, but that probably won't last. So if we do see that, do you see a pullback in industrial demand for silver?
The industrial demand, the figures that have come out, they've been quite strong, and globally they're going to continue to strengthen. You'll see emerging market growth once they get an efficient way of getting the vaccine and getting that rollout. You'll see their industrial demand take off as well. When you get economic slowing in the back half, that shouldn't impact the demand too much. So you want to use those corrections as ways to position in. Again, I'll outline some key levels, 26, 24, and then 22 to 20. Those are kind of our two levels. Depending on account sizes, how we would position people differently in those markets.
All right. Well, Phil Streible, we really appreciate your time today. Before we let you go, if people would like to hear more of these interviews, they can go to libertyandfinance.com. In the left-hand corner, sign up for the free newsletter so you'll be notified of all the new interviews we're doing. And where can people find you, Phil?
You go to bluelinefutures.com and then register for the Morning Express. We outline, the precious metals markets, all the commodities in general. It's our flagship report written by one of my partners and myself, Bill Baruch. He's been on several times with you guys, and we love you guys.
Well, thank you so much, Phil. And before we let you go, any last thoughts you had?
No, just keep an eye on treasury yields, and then also, focus on your position weighting, use corrections, don't chase the market up. That's often leads to bad decisions, and, good luck and good trading.
Once again, Phil, thank you so much for your time, and God bless.
Yeah, thank you.
This is Dunnigan Kaiser, founder of Liberty and Finance. I'm now a licensed gold and silver broker for Miles Franklin. Call me directly for the physical gold and silver that you need at the best price with personalized private service from one of the oldest and best companies in the business. 31 years strong, A+ rated by the Better Business Bureau, 0 complaints, licensed and bonded for physical delivery, vault storage, or precious metals IRAs. Excellent prices, privacy, and confidentiality. Pay by check, money order, ACH, bank wire, or Bitcoin. Satisfaction guaranteed. For fastest service, just call 1-888-81-LIBERTY. That's 888-81-LIBERTY. And either I or one of my sons and fellow brokers will call you back as soon as we can and understand your needs.